Good morning, traders. It's the 30th of June, last trading day of the month, the quarter and the week. Hope everybody's doing great. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mate. How are you doing?
Yeah, good.
Good
Glad it's the end of the
morning,
week.
everyone.
Yes, indeed. Anybody watching, please feel free to get your comments in. Let us know the markets that you're looking at. It's been a challenging market, I'd say, for the last few months, really, as markets are moving sideways, lack of trend in certain assets that we follow. But we'll do our best to navigate it and try and guide everybody in the right direction. Let's get into the headlines first of all, just to see what's moving markets at the moment. And we can see from the headlines here that German inflation edged higher yesterday, which was expected. The overall rate came in at 6.4% from 6.1% previously. That was actually slightly above the expectations of 6.3%. We also saw US jobless claims decline in the previous week to 239,000. That was a better data point. The last number was at the expectation was 266,000. And the dampened expectations over a softer labour market. We've seen some confused Fed rhetoric. The Atlanta Fed President Bostic stated that he doesn't see as much urgency to move on interest rate than others. He did, however, also comment that nobody should take a signal from his view and that the bank should pause. He added that there are undoubtedly scenarios where the Fed could move at 2 meetings in a row. Still, the Fed futures are suggesting an 85% chance there'll be a rate hike in July. We saw net dollar gains yesterday. Stronger than expected US data helped propel the dollar stronger. After initial losses on the session, we saw the dollar post fresh 10-day highs on the session. The Swedish Riksbank increased interest rates by 25 basis points in line with expectation, and the governor voiced opposition to market intervention. The krona was unable to make any headway after the rate hike. Today, we've got some data from both the Eurozone and the US. Both are inflation metrics. We have the Eurozone inflation data. The consensus forecasts are for a headline annual rate to decline to 5.6% from 6.1%. And the US PCE prices data is also due. Consensus forecasts are for a 0.4% monthly increase in prices, with the year-on-year rate unchanged at 4.7%. As mentioned as well at the start of the show, it is the end of the quarter, therefore there could be some position adjustment. The fact that we've got the end of the quarter, the end of the month, and the end of the week all coming together, there could be some choppiness, particularly around the London close. So do be aware of that. Also, it's a bank holiday in the US on Monday as it's Independence Day. So is it on Monday?
Yeah,
They do
July
it
the
on the day
4th.
it falls. Yeah, it's on Tuesday.
Tuesday, yeah, July the 4th.
Do they do it on the Monday? I think they actually do it on the day, don't they?
Yeah, I think so. I did get an email. I'll double check on that.
Okay, thanks. Right, well, let's get into the latest on the charts then. Steve's going to kick us off with a look at cryptocurrencies.
Yeah, have a look. Just share my screen now. Briefly cover off what's going on in Bitcoin. We had a little bit of a pop-up high yesterday, well, overnight actually. 5 o'clock this morning we had a candle which hit a high around 31,268 and reversed sharply from there. This is the daily chart. We're talking about this impulsive move higher that we've had from last week. This is when BlackRock have announced that they're going to provide an ETF, or they're applying to provide an ETF on Bitcoin. This is like push things high. That's funny, really. After BlackRock's CEO, I think it's Larry Fink, isn't it? He turned around in December and was talking about how Bitcoin is just a money laundering exercise, and now they're creating an ETF on it, something like that. It's amazing how things change when money's involved. We've had this rally since 15th of June, so it's only taken a couple of weeks to have this nice extended rally higher. As I say, stalled, posted a new high. That's probably a new, is that 12-month high? Round about that, 31st of May last year. Yeah. So 35,000 is the measured move target of the inverse head and shoulders formation. That's one to look out for. And this looks like a bit of a bullish flag. The measured move target for this bullish flag will be around about here. which is just above, it's around 37,000. So that's one to look out for as well. So Bitcoin on the front foot and pushing higher. I think got short-term potential on the upside, but overall I'm still bearish on it on the long term. XRP's had a bit of a setback compared to Bitcoin, and we saw levels dip to 45 cents, or 45 cents this week. Got down to there on Wednesday. Thursday's price action was a little bit more positive, and Friday has been positive again. We've got resistance now coming in around about 48.30. Above that, we've got the 50 psychological, then 52.78. Above that, 56.60. The levels to watch in XRP. Moving on to commodities. Taking a look at gold. Gold had a bit of a move yesterday. I did this and gun to head and got stopped out. A bit annoying, really. The high yesterday was 1913. Got down to 1893, which is the lowest levels we've seen since March this year, 15th of March this year. So a nice little dip down there. We did have support from the low of the 15th of March, which was 1885. So there is support a bit lower than that, but there doesn't seem to be much between that 1900 level and probably the real support down at 1805. So I think if we do get a solid break or low closes below this 1900 level, then we could have a bit of an extension further. But it seems to have held on. Posted yesterday what looks like a bit of a bullish hammer candle. So there could be a little bit of potential for the upside. But obviously, it's all down to the dollar. Dollar seeing that strength yesterday, putting gold under a bit of pressure, and that could see some follow through today. By the looks of things, this is having a nice impulsive move higher. Joe will divulge a bit more about that shortly. Looking at WTI crude oil, let me just refresh this chart. Nice little move since Wednesday's oil inventories came out. Thursday's price action extended higher but pulled back. And again, we're on a positive setting this morning. Resistance should be around yesterday's high, 70.62. Above that, the more major resistance around about 72.70. On Brent crude, which trades at just under a $5 premium to WTI crude oil, again, similar sort of price action, had a really nice bounce from this $71.50 level. We pushed up to 75.91 yesterday, and we've pushed higher again this morning. So on the front foot, resistance coming in around about the 78.40 level, also probably from 77.50 upwards. So that's the levels to watch. I've got the dog attacking the postman in the background. And nat gas, really nice extension higher yesterday, broke above resistance at 242, pushed higher, really targeting the next level, 279. That's level to watch, trading at 267 at the moment. We'll have a look at indices after Joe takes us through the FX.
Thank you very much, Steve. Let's take a look at dollar index then. And as mentioned, we saw dollar push to the upside yesterday on the US data that came out. So two decent green candles in a row here with the dollar index pushing higher from this support at 102.23. And looking now really to start moving towards resistance above, coming in around 104.20. So looks to definitely be on an upward path in the short term. Not sure where that line's there. So yeah, all in all, pretty choppy, pretty range bound, but looks as though it may want to head higher in the short term. Looking at euro US dollar, we'd expect to see prices coming off because of the dollar strength, and that's exactly what we can see. Prices rallied into resistance around 109.42, and prices are continuing to move lower. Another red candle yesterday. I'd keep an eye on this low here from last Friday. That's at 108.44. If we break down through that, then it's likely to trigger further downside, potentially back down towards these support levels below at 106.40. So again, pretty mixed, pretty undecided. We do have some data out today, both in the Eurozone and the US, which are inflation data points, and that could have a bit of a say. Also being the end of the month as well, it might flush out some of these positions. We might see, truly where some of these hands are, and if they fold, or whether or not they're going to continue to push higher. So interesting times ahead. Looking at cable, so that broke through major resistance at 126.66. We're now below that again. We expected that to provide some support, but interesting enough, we do have the trend support line now coming into play. Is that going to prevent prices from moving lower? Only time will tell. we'll just have to wait and see there really. No clear indication, I don't think, about what's going to happen next. Maybe some support around 126.00, which roughly lines up with this trend line. So if you are looking for an opportunity to buy, maybe that's a decent candidate. But do you want to get today out of the way first? Maybe. Depends what your appetite is to risk. Let's take a look at dollar yen. That's been rallying substantially and continues to do so. We've stalled a little bit today at resistance at 145.10. That's the level we mentioned yesterday as potentially providing some resistance, and it appears to have done so early on in the trading session. But that comes off the back of a substantial move higher. So likely that we're going to get some maybe consolidation before potentially a continuation higher towards that 78.6% fib level at 146.65. Any requests coming through? There's a couple
Yeah,
there.
we've
Let's
got
take a look at
New
New
Zealand
Zealand.
dollar Swiss.
Okay, let's take a look at that, shall we? Higher today, up by 0.37% as things stand. So immediately what we can see here is that this pair is trading in a pretty substantial downtrend. That's pretty obvious for us to see there, dating back really to February 2021. In the shorter term, we can see that there has been a bit of sideways price action. It appears to be some major support forming around these levels here at 54.33. So we had a range that was in place here. We then projected prices lower on the break of that range. The measured move target coming at 55.72. We smashed through that pretty easily, but we did have an extension at 161.8, which can also be quite useful. And that appears to have provided some short-term support on this particular market. Decent bounce over the last couple of sessions. So potential there for a bit of a corrective move, but you've got to factor in that still we are seeing a sequence of lower highs. And we need to obviously invalidate that before we can get too excited maybe about a corrective move. Let's take a measurement from this high here in January and see if we can cut through some highs here. So we've got the 3 touch points that we require in order to make that a trend. So maybe the rally, although could be a decent one, may only be in towards that downtrend resistance level, and that would continue to confirm this sequence of lower highs. Of course, if we can break through that, then that may provide even more encouragement to the bulls, and we may see a decent correction from there. But at the moment, the overall trend remains bearish, and we have to keep that in mind. Let's take a look at the hourly, actually, just to see if there's anything shaping up here. Potentially a bit of a short-term bottom, which is quite nice to see. We can see maybe a bit of an inverse head and shoulders here is formed. It's only very small. In terms of where prices could go on the upside, if we were to take a measurement of the low to the neckline and project it higher, that comes in at around 0.5490, which roughly coincides with these lows here. So that would be probably a short-term target. Is there enough in that from a risk-reward perspective if you were to buy it at current levels? Only you can decide that because it would depend on where your stop placement is. But potential for a bit of a bounce there in the short term. Overall, the trend remains bearish.
Yeah, I think Lompra was looking at the March 2020 low, which is around about 53.
Okay.
Just sort of like saying if we break 54.50, like you said, 54.37 or whatever you said, potential for a continuation lower down to those lows.
So
But
if we
yeah,
can
like
look
you
back
say,
down to those lows, let's have a look.
yeah, I
Yeah,
mean that's
yeah.
quite a spike low, wasn't it? So that was like an over
That was at the height of
exaggerated.
COVID, right? So that's the COVID sell-off. Then we saw this big move to the downside. This is probably where we started seeing the measures come in to support economies, and saw a decent bounce back. But yeah, that will be a mark for sure that people will watch.
Yeah,
It's
I mean I would consider that the level of the days either side of that spike lower, where you got the low at the same level, so which is a little bit higher probably.
yeah,
Um, that because that one day where it just went into free fall, it's almost like that tale of just computers like crashing, people's like panicking, getting me out. But then it's sort of like you want to see where prices really settle down and the bulls really sort of stand firm, and that's probably higher than that 53 level.
yeah,
But yeah, I mean it is forming a nice short-term bottom here, but it's still got a lot of work to do before
absolutely,
you
yeah.
can say that this trend is over.
Yeah, so I think that is the key level to watch, 54.33. If it breaks below that, then I think it brings those COVID lows into focus, and maybe that's where prices could head. Certainly, that's where the overall trend is taking things. Okay, I'll leave it there on the currencies. I don't think there's any other requests, so I can pass it over to you, Steve, and you can take a look at some indices to wrap up the week.
Yeah, lovely, mate. Okay, just add my yeah. Looking at some indices here, we've had a nice reaction higher from FTSE since Monday's low was posted. Bullish hammer posted, nice pushback higher. Although yesterday was under a bit of pressure. The high this week 75.16. We're trading just below there. But we still feel like we're almost, you can see the MACD just flatlining, really sort of like again that pressure remains elevated and to the downside. DAX is performing a little bit better. That had that morning doji star formation. That MACD looking like it's going to cross over as well. So a nice rally higher into resistance coming in around about that 16,000 level, just above there. Next resistance above that, probably about 16,100 or just above. But obviously we've got the all-time high, obviously sitting quite nicely at the top here from the middle of June. So it's a couple of weeks ago now we hit that before this quite aggressive sell-off. We're getting this nice little bounce going on at the moment. We can even sort of like take a look at that on a fib level, and we've just exceeded the 38.2% fib. 61.8 is around about that 16,150, not far from that other swing high that we got from the 5th of June. So yeah, nice positive move into this week for DAX. EU50 the same, although this morning it's been a little bit slower. US 30, the Dow, good extension higher yesterday, again into a bit of resistance. We can sort of not get too into the levels, but 34,200 would be a 61.8% fib retracement, which is a normal retracement. NASDAQ, it's a little bit sideways for the last couple of days, so it's been pretty quiet. I think we've got some like big volatility events coming up next week, which we should sort of like get really the next trend out of. Hopefully, we're desperate for a bit of a trend. It feels like we're coming to the end of this this bull run, and it's always very difficult to trade when markets transition between them trends going to sideways and then wait for the next trend. So yeah, it's quite difficult to call, and that's showing up in our gun to head trade ideas and results at the moment, Joe. Not looking good, mate.
Struggling, aren't we?
Yeah.
I think yesterday I had a small loss on New Zealand dollar, Japanese yen, so it certainly wasn't a disaster. It looks as though it kicked on a bit this morning, and as you mentioned, you were stopped out on gold. Really choppy market. So I mean, it's a real struggle. There's no definitive trends really in many markets that are easy to follow, particularly if you're a short-term trader. I think if you're taking longer-term positions, then maybe you're okay weathering the storm. But for shorter-term guys, I think it's been a real mixed bag. Hopefully, some people can comment in the comments to say that that's not the case and they're doing very well. Of course, we'd love to hear that, but I'd be surprised. Looking at well, quickly recap on the gun to the head, because if anyone's new here, they need to know what it is we're doing. Basically, Steve and I pick trade ideas live on the video. A couple of basic rules to follow. Must have stops and targets on these ideas. They are intraday trades. We will close them out at 9 p.m. UK time unless the stops or the targets that we put in place are hit beforehand. As a bare minimum, we must have a risk reward ratio of 2 to 1 or better on these trades, and we are risking 1% of trading capital. So we've been doing this for, this is the 868th episode of Talking Ball. So we've been doing this a very long time. If we go back to when we first started, and we've done this since day one, our overall performance is still very good because of that 2 to 1 risk reward ratio that we employ on all of the trade ideas. And we'll go through phases in the market where technical analysis works very well. We've got clearly defined trends. There's enough volatility for us to be able to spot these moves and get in and out. But certainly, since the start of this year, really 2023, it has been a bit difficult. But you know, markets go through those phases, and we need to adjust accordingly. So we'll try and do that again today. Let's try and end the quarter on a positive note. Is there anything that's standing out for you, Steve, that you want to show with everybody today?
Well, yeah, I mean, from a short-term perspective, I keep sort of like looking at gold, and it sort of it's sitting quite nicely short-term. Yesterday's reaction from that 1893 breakdown lower, and I think obviously the main driver of this is the dollar, and as you can see, the dollar's looking sort of like still looking quite positive this morning. The 4-hour chart doesn't look so negative. Although we are in this trend, we've sort of, resistance really up around about that 1930 level. We've got short-term resistance at 1913. Now, so I could play a nice little short trade on the back of that, but that 4-hour bullish candle tells me I should have the stop higher. But again, we haven't got much choice. It's a process we have to do. If I look at the weekly chart, I can see that the trend is quite clearly defined, but we're trying to pick out a trade just during this day. Next support coming in around about that 1870 level. So for me, I might go again with gold, stick to it, stick to my guns. And while we're below this 1-hour cloud and the 4-hour cloud, obviously, I'd like to stick something in there. And we're looking at sort of like targeting a move down to that around that about 1880 level. I can bring the stop in a little bit tighter than that, but again, it feels like if you do bring that tighter stop in, there's a good chance it will sort of like get hit. See, it changes a lot. We're going to go for a 1.03% risk. I'm going to do something which I shouldn't do. Obviously, we sort of like try and, oh no, let's get the stop in it. Oh, I'm selling as well. What am I doing? Price stop is around about 1915. Targeting a move to 1881. That's risking 1.5%. Don't want to do that. Sorry about this, ladies and gents. Right, there I'm going for that. That's around 1%. So my stop is at 1914. And my target is at 1881. And yeah, just been triggered at 1906.39. There we go. That's my trade idea,
Steve.
Joe.
Okay.
Yeah, cheers. 3.34 to 1. So got my fingers crossed for that.
Okay, I'm going to stick with what I did yesterday because we can see here, this is my trade yesterday. It didn't get stopped out. It just basically did not a lot. It looks as though there was a short-term bottom forming, which is what I went for. Didn't quite have the confirmation that I needed to get the trade on. But well, looking at it now, you could argue there's a small bottom there. We have got confirmation. We've seen a nice pullback to test that support. Also looking at this on the daily chart, just to refresh those who are new. So this was a big range. We broke out through the range. We saw a pullback. We're holding around support for the time being, suggesting that we're going to see a continuation high. And we've seen yen has been weak across the board against all other currencies. So there is a trend in place here. And therefore, I'm going to try and go with it. So looking at the intraday charts, just to get this trade on, I'm going to go with a stop at 87.77. And I'm going to target a move to 88.95. I might need to adjust my stop slightly actually to give me that risk reward.
It's 2.01 at the moment.
Okay, do it then. Hit it. Hit it.
Well done. You're done.
Okay, so we're on. Going again with the New Zealand dollar versus Japanese yen. Okay, so there's the two trades. Let's have a look at the data that is due out today. And as mentioned, we've got this Eurozone Consumer Prices Index number. That's out at 10 a.m. UK time. 1:30 UK time, we've got the US PCE Prices Index. At the London close, so between sort of 4 and 5 p.m. tonight, it is end of quarter, end of week, end of month.
Life.
End of life could be. So do be aware of that. It could be some choppy position adjustment at that time. Next week it starts to hot up as well. ISM manufacturing, Reserve Bank of Australia, Federal Reserve, non-farm payrolls on Friday. So plenty for us to be on our toes with next week, and we will do our best to cover that next week and get you as prepared as possible. So that's it from us today. Thank you everybody for watching this week, and we will see you next week.
Yeah, cheers everyone.
Have a good weekend. Bye bye.
Bye.